In the first part of this chapter, we examined 3 of the policy standards for a good tax. In this video, we're going to look at the 4th standard, which is a controversial one, the fairness standard. To recap from the first part of chapter 2, there are 4 standards for a quote good tax. Taxes should cover all government services or be sufficient. Taxes should be easy to pay and easy to administer, convenient, and taxes should drive taxpayer behavior in the desired manner, or be efficient. The fairness standard is a tricky one, which is why we have a full video devoted to it, because nobody likes paying taxes and nobody wants to pay more taxes than they feel they should, and most people feel they should pay 0 taxes. So by fairness, the tax code makes 3 assumptions. First is a tax should be fair based upon one's ability to pay, meaning that the taxes I pay should be reflective of my ability to pay, or the degree of economic resources within my control. The second fairness standard, and one that we're going to spend a little bit more time on in just a few minutes, is vertical equity, which implies that a person with a greater ability to pay taxes should pay more taxes than a person with less ability to pay taxes. And we'll look at the popular rate structures for taxation. Finally, horizontal equity. 2 persons with the same ability to pay should pay the same amount in taxes. Should 2 people who each earn $100,000 a year pay the same amount of income tax? Well, that depends. What if person number 1 is a single female who's generally healthy, and person number 2 is a single mother who supports 3 kids? Should the single female pay the same amount of tax than the person with kids? Most people would say no. The person with 3 kids has to make her economic resources stretched for 4 people, not just 1. So the tax code assumes that this person should pay less tax than the single female. Likewise, should the person who makes $100,000 and has to pay $30,000 for medical care that's not covered by their insurance plan pay as much tax as the person who's healthy and doesn't have to pay anywhere near the $30,000 for medical care that's not covered by insurance? The tax code says no and allows for an itemized deduction to cover these medical expenses. Horizontal equity will cover when we get to unit module 2, which covers individual taxation. For now, let's look at vertical equity, which has to do with the rate structure built into our tax system. The tax code tries to impose vertical equity and horizontal equity through the rate structures. 3 popular rate structures are the regressive tax, the flat tax, and the progressive tax. Under a regressive tax, the tax rate decreases as the tax base increases. Let's take a look at what that means. Assume that the city of Lubbock utilizes a regressive tax structure to assess property taxes within the city. A property owner will pay 1.75% of the first $500,000 of property value and 1% of all property value assessed above $500,000. For an example, let's look at 2 homes in the same neighborhood, Tech Terrace. This implies the same zip code, same schools, and same desirability or closeness to shops and Texas Tech University, but different home values. That should be the only difference. The first home, a starter home or a student rental home, was assessed at $122,000. The owner of this home would pay $2,135 in property tax. which would represent an average tax rate of 1.75%. The second home in the same neighborhood, which is more typical of a home that a faculty person might own, runs for $799,000. They pay $8,750 on the first $500,000 of assessed value, and they pay $2,990 on the latter $299,000. This brings a total tax of $11,740. If we assume that the size of one's home implies the ability to pay, this is vertically fair. The taxpayer who owns this home pays more taxes than the taxpayer with the starter home. But then let's look at the average tax rate. The person who owns the starter home pays 1.75% homeowner's tax on average, whereas the person who owns this home in Tech Terrace pays an average tax rate of 1.47%. Is that fair? In this unit, we continued our discussion about the policy standards driving United States federal tax policy, looking specifically at fairness. In the next unit, we'll look at how the Internal Revenue Service, or the IRS, enforces the tax code, as well as the ways that a taxpayer can take action against the IRS if they believe they have been treated unfairly or applied the law incorrectly.